Morning, guys. Sorry about that today. I just had to get something from my other computer onto this one, but we're ready to go. So as I promised you last week, I said we would have a look at another exam paper today. Am I correct? We did in our last class, we went over the, I think it was a 2015 paper that I had uploaded. We've done that one already, am I right? So will this be the second paper that we're doing? Okay, all right, perfect. Just checking that I haven't, that my brain's not deserting me again. The one that I've got here is a 2018. I didn't have a 2019 paper that I could find that was already scanned in. That doesn't matter because I mean a 2018 is only basically a year ago. Oops, before that as well. So the only problem with this scan is that the paper and the memo are in two separate PDFs. So it's going to be more difficult to flip between the paper and the memo. So it might just take a moment when we're doing that. But I have got them both loaded up. And I do want to show you guys the memos. So again, you can see mark allocation. And with some of the questions, particularly like this factoring question, etc., how the answer, what a model layout of the answer looks like. But remember, guys, and this is one of the reasons why they do not allow us to circulate memos to students, is that a memo is basically a marking plan for the lecturer. And I don't want the students to get bogged down with what the layout of the memo looks like. And then the students feel that their answer has to look like that, and then they try and memorize that layout and do it like that. And often in the memos as well, we make changes when we mark in. We confer with the other lecturers, and sometimes we make changes to the answer itself if there's perhaps something we don't agree with, etc. And quite often the memos can be what I would call slightly abbreviated. They don't always give us in a memo for the markers all the different versions that a student can use to lay out a particular question. So sometimes they, well, I call it lazy, whoever sets the memo up, they only give us, for instance, the financial calculator version of the answer, and they don't give us the formulaic version. Whereas a lot of the students still use the formulas and not financial calculators. So then a student that looks at a memo and they only see on the memo this very shortened financial calculator version, it's going to intimidate them and make them very nervous. Okay. So that's just a heads up that I'm giving you now before we look at the memo, to say that the memo, it's got the answers in it, but it's not the be all and end all of how a question must be laid out. So as I said, it is a good indication to you of how the marks are allocated, what we are allowed to award marks for, and we're not allowed to award marks for anything that's not indicated on the memo in terms of the amounts. But then because of method marking, if you've used a different method and you've got to the same answer, we can then allocate the mark according to then our own discretion. Okay, so you've got your textbook, you've got the questions in the main text, and then you've got those extra questions at the back and the solutions. Sometimes the solutions at the back, they've done it in a different method to the solutions that they've done in the main part of the chapter. And again, that as students, you are allowed to use whichever method you're comfortable with, as long as it's going to assist you to get to the right answer. Okay. That is very important when you see these questions, that you understand how to work with them. You're going to get 5 days, 5 working days, somewhere on my calendar. I've put these dates in. Where are they? This is my page here with the dates. So it's they've told us that they're going to upload the exam papers 5 days before the due date of the exam. And I check with National, and it is 5 working days. So for you guys with finance, you are writing on the 20th of November, Friday. You guys are writing on campus. So yours is on campus. I'm getting my brain muddled up. But for instance, like your tax paper, your tax is due on the 25th of November, and that's a take-home paper. It should be available on your portal on the 18th of November, sometime on the 18th of November. So 5 working days prior to the due date, you should then be able to download the paper. Okay. So if you're going to download your tax on the 18th of November, it's only due on the 25th of November, and you're writing finance on the 20th. So that what I would do that week of the 16th of November to the 20th of November, I would ignore tax and I would only study my finance, because that's going to be on campus, and make sure that you're prepared for Friday the 20th. And then as soon as you've written on Friday the 20th, that weekend, that Friday, Saturday, Sunday, etc., then go and work on your tax, because then you will have what time are you writing finance is at 9 a.m. So you've basically got from Friday afternoon, Saturday, Sunday, Monday, Tuesday, Saturday, Sunday, Monday, Tuesday, Wednesday. Then you have actually got 5 calendar days to do the tax. Obviously, I'm not sure what your other modules are and what their due dates are, but hopefully nothing else is going to clash finance and tax. What's your situation like with your accounting? Is that a take-home exam, and what date is that going to be? On campus, the 18th. Oh dear. So you're having to study for finance and accounting all in that same week. Okay, so then you've got a lot of planning to do. From the end of this week, on Thursday, we finish classes. I'm assuming you're going to finish everything else as well. So then if we just leave out the rest of this week and you start on Monday the 2nd, you've then got 3 full weeks to then prepare for your accounting and your finance. So just make sure you put together a really good study plan to cover everything that you've got to. That's essential. Okay. Yeah, so this will be our last finance class. There's only tomorrow we've only got tax, and Thursday we've got tax. And there's no more finance. So after this, you guys will be on your own, but obviously you know that you can shout out anytime you've got a problem. Okay, so let's just go and have a look at what questions were asked in 2018, and we'll have a look at the solutions so we can see more or less what they did and how they split the questions up. So this question is a Learning Unit 5 question. Sorry, just a second. I don't know what I've done with them. I've got buried somewhere. Where are they? Weird. Let's just have a look here. No, I don't see them now. I don't know what I've done with them. Okay, anyway, we don't need them at the moment. So this is Learning Unit 5 for 25 marks. Company generates credit sales of 3250. Oh, by the way, guys, I meant to say to you also, I have finished marking your Finance 2 test. Yeah, your second test 2 for finance, and I have also sent through your ICE marks for finance. So the ops office can now prepare your CAS marks for this module, FINM7322. So if you want to go and have a look to see what your mark was for test 2, you can go to your grade center. I'm not sure how your one works, and you'll be able to pick up the mark there. I have got that column open that you'll be able to see it. And if you want to see how you did different questions, the way that I am finding it fastest to mark is if I download your paper offline in the PDF. If it's a Word, I have to create a PDF with it, and then I mark it offline on PDF, and then I upload it again. So where you see the lecturer's comment, if you go to look to see what your mark is for an assessment, section where you'll see what the lecturer's comments are, there's a little place there where we can attach and upload a document. So that is where you will find your marked document. It's been uploaded in the comments section. So just click on that, it will upload, and then you'll see the marked paper there. But you'll be able to see your actual marks. And then as soon as they've uploaded the CAS, just double check us that you agree with the us. But I didn't leave a task out for anybody, but I think I'm pretty sure it's accurate. Okay. So here we have got generate annual credit sales of 3250. The company's credit terms are currently 40 days. However, due to poor accounts receivable management, the average collection period is 75 days. Okay, so just the most common problem I'm still finding with the students is that they're not reading the questions properly, and that they sometimes leave parts of the required out, and they take incorrect information or an incorrect amount and use it in the wrong place because they're in a hurry, or they're not using underline, highlight, circle, make note method on your question paper. It really is worth printing the question paper out. I know it's a pain, but it allows you to work with it, then rather just work with the question paper on your screen and then try and work from there. Save paper or save printing costs. It's not worth it. Okay, so here we are saying their credit terms are 40 days, but their current average collection period is 75 days. Their bad debts as a percentage of total sales is 2.5%. So a factoring company is offered to take over the admin of the accounts receivable at an annual fee of 9.5% of the annual credit sales. The factor would advance 80% of the invoices receivable at an interest rate of 19% per annum, and then reduce the collection period by a third. Okay, so you've just got to make sure before you tackle the question that you know 9.5% of what, 2.5% of what, 80% of what, and the same thing, 19% of what, that you are going to apply that percentage to the correct figure in each time. Okay, and it's well worth jotting down some notes in the side of that, or using highlighted question color highlights to match them up, some method like that. Please don't throw marks away. And the company estimates that factoring accounts receivable will give rise to admin savings of around 125,000 per annum. So they'll obviously have extra costs, which will be the interest rate and the factoring fee. They will then have reduced costs in terms of admin savings and the reduction in carrying value of their receivables due to the decrease in the collection period. The company has got an overdraft facility available, which it could use to finance its accounts, and we are currently paying 18.25% per annum. So that's also important that you know currently what your cost is, working out what your cost of investment in accounts receivable is. And then please always take note of this, assume a 365-day year. Sometimes they make that 360 or something else just to test that you guys are watching. You have to use whatever they've given you. So then the required, as I'm sure you can guess, is for 20 marks to determine whether or not the company should factor its accounts receivable. And please read about the rounding. You'll see on some of your tests, I can't remember, but quite a few of you rounded where you shouldn't have rounded. Don't round unless they've told you to round. Okay, so one of the questions was, what in the test that I just marked was, what would the share price be after the issuing of the dividend? So you don't drop your decimals. And then 5-mark theory question, what is meant by the term accruals, and state when financial managers would be justified in making use of accruals. So that actually comes off the test paper, that test question that you have just done. Okay. Except that I think in your test that you've just done, there were only 2 marks awarded for that, whereas this exam was 5 marks. Okay, so let's go and have a look at this, at the factoring question. Okay. So just remember, take note of all the different things that we've got there. I'm going to have to just upload the memo quickly. Not upload it, but just share it. Okay, so these page numbers obviously aren't going to be exact anymore because the textbooks changed slightly, but they will be more or less. But we did quite a few of these factoring questions throughout the semester, factoring and should we change the letters, terms, etc. Okay, so one thing that I've written on quite a few people's papers as well is I've called it labeling, and I've said label your work, write down descriptions for each of the lines. So what your exam paper should not look like is just columns of these figures over here without a full description and your workings as to what this amount is, together with a heading showing exactly what are you trying to achieve with this particular set of workings. It's absolutely crucial, and it's a good thing to learn for when you guys are actually working one day. You don't ever send work through to your boss or present at a meeting or something if people have asked you to work something out without these clear descriptions, headings, underlining, highlighted, etc. Because people who read your presentation or are watching your presentation, they don't know what's gone on in your head while you were sitting there knowing what you're referring to and when you were doing your workings. So when you present something like this and it's all these numbers, you are the only person who knows exactly what done over here and what these numbers present. No one watching your presentation will have a clue unless you have laid it out properly. That's one of the reasons why it's essential that we teach you that while you're here at varsity. It obviously makes it way easier to mark well, but it is just a discipline in this is how you do financial models, how you write up financial models for presentation purposes. Okay, So it's not just because I feel like asking you to write the stuff. I know it takes longer, and if you are sitting writing timed exams, obviously it takes a lot of time, but it takes a lot of extra time. But you can't leave it all out. You have to put something in there, even if it's abbreviated. Okay, so our first one over here is, excuse me, sorry. The first one we've got here is the cost of financing our accounts receivable with the overdraft. So currently, what does our investment in accounts receivable cost us from a interest expense point of view? So the 325 our annual amount of credit sales. Currently, the amount of credit sales that we have outstanding is 75 days. So 75, so this is the annual amount, 3250. So if we divide that total annual sales by 365, what we are left with is 1 day's worth of credit sales. Then multiply that by 75 so that we know what the rand value, average rand value invested in accounts receivable is. And then I multiply that by 18.25%, which is my overdraft rate that I'm currently paying. So that gives me an approximate annual cost of utilizing my overdraft to finance that working capital that's invested in accounts receivable. And currently, I've got another expense, which is my 2.5% bad debts. So it's just my annual sales, 2.5% of that I am currently losing to bad debts. That's a cost, and this is a cost. You could have presented all of these in brackets showing that it's a cost out, and I think if I was writing this down, I might have done that, because as a student, when you're writing your answers down, you need to be very quickly look at something and see whether it's cash going out or whether it's cash coming in. But anyway, as long as you head it and you label it correctly that this is a cost, you shouldn't muddle yourself up. And then I currently have an admin cost of 125,000, which obviously I must have that. If it says I'm going to be saving that in costs, it must be included in my cost moment. So my total current cost for administering accounts receivable is then those three amounts added together. The working capital cost, the credit loss cost, and my admin cost. So then I know what the total cost is, and I'm now going to work out what will it cost me if I factor my accounts receivable, and then I can compare the two. So if I were to factor, it would cost me, the factor would advance me 80% of my total credit sales. And remember, that's going to be 80% of the outstanding amount of credit sales. And he will charge me 19% interest on the advance. So what we've got here is an annual credit sales times 80%, because he's only going to advance me 80%. Accounts receivable is going to have reduced by a third. So 75 days minus 1/3, or 75 days times 2/3 is then going to give you your 50 days. So that's going to be the amount, 80% of my annual sales, and then 50 days worth of that annual amount will then be the amount that the 19% will add to. So my factor financing is only going to be 67,671, which is way less than the 121. I will still have an overdraft, because remember, the factor is only advancing me 80%, which means the remaining 20% I am still funding exactly in this method over here. So 20% of my annual sales also multiplied by 50 over 365, I will still be paying 18.25% to finance that, the other 20%. Then I will have factoring fees, which are 9.5% of the total credit sales. And then that is my total current cost of factoring. In this question, it wasn't very clearly laid out about the bad debts. They should have specified very clearly what would happen to the bad debts under factoring. So you just had to assume that you would have no bad debts, because they also didn't state here whether this was factoring with or without recourse. So if it was factoring, let me just get this the right way around. If it was factoring without recourse, then that means that the factor will be carrying the cost of the bad debt. They should have put that in the question. And guys, if you are sitting in the exam room and you come across this question and they haven't told you about is the factoring with or without recourse, please put up your hand and ask them to clarify that for you while you are sitting there. There are people at National, when they are writing exams, that are available to answer questions like that, the people that wrote the papers, and they might give you those answers. So don't sit there and waste time wondering. Ask the question, go on to your next question. When they come back and they give you the answer, then you can go and tackle your question and complete it. Okay, so remember the required said determine whether or not the company should factor its accounts receivable. So you must answer that. So you must have a conclusion to tell us whether or not. Okay, so at the bottom here you can see there's 2 marks for interpreting your workings correctly. And if you just do these workings and you don't give a conclusion, you're leaving 2 marks on the table. Because yes, I can read your figures and I can see that the factor is more expensive than the current cost, but you have to give the conclusion for the 2 marks. So take note also for those 2 marks exactly how they've what they awarded to. So there's 1 mark for saying the cost of factoring is greater than the cost of administering the accounts receivable internally, because there is an increase of 64,546. 1 mark for stating that. And then there's 1 mark for saying, therefore, the company should not factor their accounts. Don't just put the little thing at the bottom here that says, no, don't factor. Okay, you are expected to interpret the answer and then give a conclusion. That's important. And I'm not going to worry about this 1.2. That's straight out of your textbooks. That section on accruals. What would be interesting is just to see how the marks are allocated. So 5 marks, 1 mark must be allocated for when there is justification in using accruals, because they said explain when they would be justified. So there's 1 mark for stating when they would be justified, and the other 4 marks are then for explaining what is meant by the term accruals. Okay, so remember also break the question down. If they said explain what is meant by accruals and justify when financial managers would use them, you must answer both parts of those questions to get all 5 marks. Okay. Any questions on that? Worked so nicely just now. Any questions on that one? Here's your question 2, and this is for 20 marks. And this is a Learning Unit 6 question. You've been presented with the following schedule of options contracts held by your company, and each contract is for 225 shares. Please take note of that info. So there are 5 different options. Some of them are puts and some of them are calls. So make 100% sure that you have got some memory jogger, that you know exactly which way round they are. This is the cost that you paid to purchase the option, okay, which is a fixed cost. So that's 125 rand for buying the option to purchase the 225 shares. So remember, you've got to divide the 625 by the 225 to get a per share cost. The strike price according to the option is whatever it is here. And then the underlying share price, meaning the market price at expiration of the option, is this one over here. So you must just remember that if you are holding a put option, it means your option is giving you the right to sell shares at strike price prior to the expiration date. So if you are selling shares, you would want the strike price to be higher than the market price, because you would be receiving 35 Rand instead of 31 Rand. If you hold a call option, it's the other way round. You are then holding an option giving you the right to purchase at 45 Rand, whereas if you purchase them in the open market, you would be paying 48 Rand. So for a call option at expiration date, you want the strike price to be lower than the market price. To decide whether you would be in, so for a put option, you will be in the money when the strike price is higher than the market price. With a call option, you'll be in the money when the strike price is lower than the underlying price at the time. Okay, so what they have asked you to do is to calculate the gain or the loss to the company upon exercising each of the options above, and indicate whether or not each option should be exercised. So take note, there's already 2 parts of the question. First of all, calculate the amount of the gain or loss. Secondly, indicate whether it should be exercised or not. And thirdly, provide a reason for your recommendation. So there are marks allocated for answering each 3 parts of the question. Okay. So again, don't leave that out. So they give you a suggestion, information about the option. This is your calculation and the Rand value of the gain or loss, and this is a comment section for stating yes, purchase it, or don't purchase it, and why. Remember, the comment is a decision and a reason. So this is what your answer could look like. And have a look at these model comments particularly. And again, you can see how beautifully it's laid out. It's going to be very easy to mark this. And guys, take a ruler with you to the exam and do this. When you've done one section, then rule a line. There's one comment that I put on so many students' papers, and that they don't leave space between questions, either between question 1 and question 2. They squish them right on top of each other, and they don't number them clearly. And when I'm sitting and marking, it's sometimes even difficult for me to tell when the one question finishes and the next one starts. And then I've got no space to write down comments or write in the marks. And it does really slow things down and make it very difficult to identify exactly what you've done. Those small things are very important, and they do get you extra marks. That means that there's no marks that have been missed because they've been hidden away in scruffy layout somewhere. Okay, so here's your calculation. So actual calculation has been done, and again, you can do it however you want to. You must specify whether it is a gain or a loss. If you just write down the Rand value, you can lose a half a mark because they've asked you to state whether it's a gain or a loss. And I will show you where's the, I haven't, yeah, at the bottom, award half a mark for the calculation, and there's a half a mark for indicating whether it's a gain or a loss. So if you leave that out, you're going to lose 2.5 marks. Whoops, 2.5 marks. Just because you didn't write that word gain or loss. You cannot assume that the marker knows what you've calculated. And then here's your comment, and you'll see that it's also split into 2 half marks. 1 half mark for stating whether it should or should not be exercised, and the other half a mark is for the reason. Okay, so again, if you forget to put down a reason, you're going to lose 2.5 marks there. So what often happens is that students see this, they know exactly how to do this question, they think it's easy, they write down everything, and then they've still lost 5 marks because they didn't read the required carefully and put down exactly what they were supposed to for the marks. If you haven't written that reason down there, even if your calculations are 100% correct, I cannot give you that mark. Okay, so let's go to question 3. Sorry, I can't see this very well. That's question 4. Let me go back one. So for question 3 is out of 25 marks. And this is a Learn Unit 7 question. And it's got several parts to it. It goes right up to 3.7. So we've got Smart Limited is considering acquiring, so this is our merger and acquisitions question, another company through a share swap using an exchange ratio of 1.5. The management of Smart Limited anticipate that the PE multiple at which the company will sell will remain unchanged after the merger. In other words, your PE ratio will be the same before and after the merger. Earnings and share data of each company are summarized as follows. So this is obviously upfront. Earnings, the number of ordinary shares in issue, and current share price of each of the. So Smart is the person, that's the acquirer, and Champs Limited is the company that they want to purchase, the target company. So required, and round off all answers to 2 decimal places, and you will lose marks if they're not rounded. If you haven't left your decimals, don't drop your decimals if it doesn't tell you to round to whole numbers. I think what some students do is they just see round off, and then they just assume, okay, they're going to tell I must round off, and then they don't read the rest of the sentence. So we've got, as you can see here, there are 7 parts to the question. So make sure with each of these parts that you've read, round off 2 decimal places means for everything, all of them, and have a look at the number of marks allocated to each section to make sure that whatever you're putting down in the paper for each of these sections is sufficient for these number of marks, and that you have absolutely followed the instructions clearly and carefully given in each of these sections. So the first part is calculate the EPS and the PE ratio before the merger. Okay, so that should be fairly simple. And you can see there's 4 marks given. So 1 each for the 2 EPSs and 1 each for the PE ratio. And after that, calculate the additional shares that Smart Limited will now need to issue to the shareholders of Champs in order to complete the acquisition, the total number of shares that will then be in issue post-merger. So remember, they gave you the exchange ratio. How many shares does Smart Limited have to give the Champs shareholders for each 1 share that they're purchasing? And then Smart has to issue those as new shares, which means that their current number of shares of 700 will then increase by the number of shares issued in order to purchase these 500 shares in Champs Limited. So after the merger, Smart Limited shareholders will then own 700,000 shares in Smart, and they will then also own 100% of Champs Limited as well. Then calculate the market price exchange ratio. Remember when we were doing this section, I said make sure you know the difference between the share swap exchange ratio of 1.5, because that's 1.5 shares versus the market price exchange ratio. And then number 4, calculate the post-merger earnings per share of the shareholders of both companies. So that will be 3 marks each. Then calculate the expected market price per share of Smart post-merger. And then briefly explain for 2 marks why the market price of Smart is expected to change following the merger. So enough, at least 2 facts. And then for 4 marks, Smart Limited is a nationwide supplier of school textbooks and stationery. So that's the acquiring company, while Champs Limited is a nationwide sports goods retailer. So for 4 marks, what type of merger it is, that will obviously give you 1 mark, and there'll be 3 marks for what are the possible reasons for that type of merger. Why would Smart want to purchase Champs if they supply school books and they supply sports goods? Okay, so that's 4 marks of theory. Okay, so here is our memo. Just go back to the question. So 3.1 wanted you to calculate the EPS and the PE ratio of each company. So then you are going to take the earnings divided by the number of ordinary shares in issue. It's going to give you your EPS. Earnings divided by number of shares in issue will give you your EPS. And then your price, your PE ratio, is going to be current share price divided by the EPS. So the 175 over the 50. There's your 4 marks. Hope you guys by now have done EPS calculations enough times, and we've used the PE ratio also enough times that you're familiar with that. And then 3.2 says how many additional shares we now need to issue in order to purchase. So we have to purchase, Champs has got 500,000 shares, and we are using a share swap ratio of 1.5 shares of Smart for each 1 share in Champ that we buy. So it will be the 500,000 multiplied by 1.5. So that is then, we have to issue 750 shares of Smart in order to purchase 500,000 shares of Champs. So post-merger, we'll just add the 2 together. The 700 we've already got, plus the 750 that we've now issued, and this is now the total post-merger. Also, guys, have a look here how the marks have been allocated. You'll see that there's a half mark for correctly taking the 1.5 and a half mark for multiplying it by the 500. And then here in the post-merger, there's a half for the 700. There's a half method mark for taking this answer and using it here correctly. And then an extra full method mark for adding the 2 correct amounts together. And in the third part is calculate the market price exchange ratio. So, here, the third part here. So our market price exchange ratio is going to be Smart Limited's current market price is 175. And we have to give 1.5 shares for each 1 share. So 175 times 1.5, because that's the rand value that I have to pay to purchase 1 share, which is worth 123 rand of Champs. So from a rand value, I am having to give 2.2 rand 13 to purchase every of my share price to purchase every R1 of Champs's price. Okay. Now 3.4 was calculate EPS post merger of both companies. So the earnings of each of them obviously remains unchanged, but now we've got a merged company, so we have to add the earnings together, and then those earnings are now being divided over the total new amount of shares. And you'll see that this is a method mark, which means that as long as you use the amount of shares here that came from 3.2, you will get that method mark. So for Smart, our post EPS is then the combined earnings divided by the total amount of shares that are in issue after we've issued the new shares to purchase Champs. That's 38.28. And then the EPS of Champs is this, the EPS of the acquiring company multiplied by the share swap exchange ratio. Because for each one share of Smart, the owners of Champs or previous owners of Champs, they own 1.5 shares in Smart. So their equivalent EPS will now be 57.4. So they get higher earnings because they received 1.5 shares in Smart for each one share of Champs that they gave up. And then 3.5 says calculate the expected market price of Smart post merger. So the expected market price is equal to post merger EPS of Smart multiplied by the PE ratio pre-merger. So the 38.28, and again, that's a method mark. So as long as you take whatever you've calculated here, you use it here correctly, and you multiply by the PE ratio. And again, that's a method mark because you must have taken PE ratio that you calculated here in 3.1 for Smart correctly. You will get those 2 marks. There's an extra bonus mark here for those students that got 3.1 and 3.3 correct, and then got everything correct. That's not a mistake. Okay. And then the 3.6 was briefly explain why the market price is expected to change, and that's for 2 marks. So here we've got marker's discretion. And as long as whatever you've said here makes sense and ties up with the theory, it doesn't have to be quoted out of the textbook. We can give you 2 marks for your explanation. And then the 3.7, describe what type of merger. So remember, the one lot supplies school textbooks and stationery, the other lot are sports goods. And again, we've got marker's discretion. So 1 mark for conglomerate merger. There'll be no discretion there. You must state conglomerate merger. And remember, that is the merger of 2 or more companies whose activities are completely unrelated, because the one sells textbooks and the other sells sporting equipment. So only one. So 1 mark for naming it, 1 mark for stating what a conglomerate merger is, and then 2 marks for what possible reason. So the objective of such mergers is then to diversify. That's very important, that word. Or to reduce risk exposure of the acquiring company's main line of business into new unrelated areas. So as long as you had used that word diversify, or to split the risk, you'll get that mark. And then other objectives could be to increase market share in total, to do cross-selling from your type of customers to the customers of the other one, and then also synergies. The synergies could be related to logistics They could be related to centralized administrative functions, etc. Okay, so very important. What I want you to take note here is not what the answer is, because you will get a different question, but how you will make sure you get all of those marks. One for naming it, one for stating what a conglomerate merger is, and 2 marks for explaining why we might possibly want to do that kind of merger. If you guys just, if you waffle on, not focusing on exactly what was asked, I can't give you those the marks. And I'm very strict with that. If you haven't answered the question, I'm sorry, I'll just find it the right page here. That was there. That was number 3. This is number 4. Because I spent so much time, oh dear, did I do the memorandum again? That's not what I want. Because I spent so much time making sure that you guys answer exactly what was asked, what was the required. You must interpret that correctly. And the reason that I emphasize it is because it is so important in real life. You can't afford to not pay absolute attention to exactly what you're supposed to be doing or what you've been asked to do. So question 4 is a nice easy one. It's a lease or buy question for 45 marks. So this comes out of your learning unit. What is this one? Learning unit. I don't know. It's one of the end ones anyway, and I haven't got the LU number written down here. Okay, so with a lease or buy question, if you get one of these, vital that you remember exactly what's got to be in each of those sections of your answer. And in this particular paper, so here's all the information, what it is that they want. So the information about the machinery they want to purchase, what the costs involved in leasing it would be, and what your costs involved in buying it would be. So whatever the question or the machine is, they've got to give you that information. So this is where it gets tricky. With the costs, remember how many years is this? 3-year lease. So this is going to be a machine over 3 years. With the information related to the costs, they will tell you in each year if it's going to increase or decrease by a certain percentage. This is where you are going to pay very careful attention and make sure you are interpreting that percentage increase or decrease. Sometimes it's a decrease, there's an increase, here's a decrease, and you're applying that percentage to the correct figure. Sometimes they tell you currently maintenance costs are XYZ, and right from year 1 of the project, the costs will increase by 9% starting from year 1. Sometimes they tell you in year 1 the costs will be 75 and thereafter they will decrease by 15% per annum. That is just, again, to make sure you are paying attention to detail and you are applying it accurately to the information that you've been given. Okay. And also pay attention what costs will continue and what costs will not continue, depending on if you're leasing or buying. A 4-year capital allowance deductions, and then the other one here is the tax. This is one that no matter how many times our students to watch out for it, half the class still gets it wrong. From the cash flow point of view, in which year does the cash flow of the tax expense arise? So in this particular one, tax cash flow arises in the following year after which it accrues. So you've got to do the calculation as to how the tax is for the operating year. And then when you do the cash flow table, you must make sure that the tax is only a cash flow out So year one's cost will only be paid in year two. So from the cash flow point of view, under year one, you will have a zero tax cash flow, and your tax cash flow will start from year 2, 3, 4. Okay. And if you don't understand what I'm talking about, go and have a look in the textbook. There are questions both where the tax is paid in the year in which it accrues and questions in which the tax is paid the year following in which it accrues. Go and look at those two solutions and make sure that you understand the difference. If you don't understand what that means in the question, ask me to explain or go and look for a model solution. Don't just go into the exam not understanding what they're talking about. So here we go. So okay, so first of all, you can't see this, but I wrote these headings on for myself when I'm marking. You see how difficult it is if you just look at this set of numbers and there's no heading. You don't know what the heck this is for. So when you're doing your working, you're going to head it lease cash flows as a heading, and then you are going to do the 4 years and the lease cash flows. So the lease, you've got the annual lease payment, which is identical. It's a 3-year lease. The tax cost, which is a tax savings, it's a tax shield, happens in the year following the year of the actual expense. In year 3, at the end of the lease, we are going to purchase the machine, and we've then got a total after-tax cash flow. Okay, so that's cash flow. Make sure you label those correct. Then 4.2 for 6 marks, and this is your annual interest cost or your amortization table. Again, this is 6 marks for doing just this table. So make sure you know how to lay it out. Here's your opening balance that you owe. They told you the interest is 16%. Write it down on your paper right there so that you don't use the incorrect percentage. And then for each year, you're going to take opening balance multiplied by 16% equals my interest cost. And then the difference between the installment and the interest is then the amount that you will then reduce the closing balance by. Okay, so I'm not going to explain to you how to do amortization tables. I'm sure you know how to do that now. And then 4.3, this one is what is the tax shield of the buy alternative. So the first one we did was the tax shield of the lease alternative. From a cash flow point of view, this is the tax shield of the buy alternative. So this is the one where you've got to be very careful to apply your increased percentages and decreased percentages to the year. You can see here your run costs are different. Insurance is different each year. Maintenance is different each year. Okay, your capital allowance will be the same. And then you'll get your total expenses that are tax shields and then calculate the rand value of the tax shield. Okay, and then here's an explanation again of how we can allocate the marks to you. You need to have got year 1 correct in order to receive the method marks, etc., etc. And then 4.4, this is then the buy alternatives cash flows. So you need a tax shield calculation and cash flow calculation for both these sides. This is the cash flows for the buy. So then actual cash going out will be your installments over the 3 years. You will be paying for your running costs, insurance and maintenance. You will be saving money on the tax shield, and take note also the tax shield that you calculated in the previous table the tax shield from year 1, you are applying to year 2, etc. Okay, so because it is takes place in the year following the actual year. So your after-tax cash flows, you've then got 4 years worth of after-tax cash flows because of this 4th year. Your tax shield from year 3 is only going to be realized in year 4. So this is worth 14 marks. So this is what was the whole question worth? It's a 45 mark question, and these lease or buy alternatives should be quite easy questions if you've got to know what you're doing. That question won't take you very long to memorize what to do, okay, if you understand what you're doing. So it's well worth investing time making sure you know, because you're going to be putting 45 marks. Here's your question 5. Here, let's just go straight to the required to see what they're asking us. Calculate Advantage Limited's earnings per share before the share dividend. So this is a company that is paying their dividend in the form of a share issue. Calculate their EPS after the share dividend. So EPS before the share dividend, after the share dividend, expected price after the share dividend, the particular shareholders' percentage holding before and after. And then for 5 marks, explain to the shareholders the advantages that it will have for both companies and themselves by adopting the strategy. In other words, what are the advantages of paying out dividends in shares instead of cash? 5 marks. And then if they were to be paying cash dividends, what are 2 different types of dividend payout policies that they could follow? So here's our memo for that. You guys have got questions exactly like this. You'll find it in past papers. You'll find it in your textbooks as well. This is a very popular question. The method of laying it out like this by asking all the different sections. It's a very popular way of asking. You guys in 3rd year. So the EPS beforehand should be fairly simple. Earnings divided by the number of shares. 5.2 the EPS after the share dividend. They are going to be paying 3.75% of the issued shares as share dividends. So that's why our shares are going to be 3.75% more than they were before. So EPS afterwards is the same earnings, but now divided by a higher number of shares. 5.3 determine the expected market price immediately after the share. So current market price is 30.25. So we've got a market capitalization before the share issue of 907,500. So that 907,500, in other words, the value that the total company is worth, that will remain unchanged. It's just that after the share issue, that will now be divided by a higher number of shares. So 29 Rand 16 afterwards. And then 5.4, his percentage shareholding before and after. He owns 2,500 shares. He now will own 3.75% more. So his number of shares as a percentage of the total number of shares is 8.33%. So his market value is now the new number of shares multiplied by the expected post dividend price, and that will give you his value of his shareholding afterwards. And then here's your 5 marks for advantages of this particular strategy. And take note, you'll see you have to give 5 separate points in order to get the marks. And usually the memo's got more than 5 marks. So as long as you remember the majority of whatever it is, you should be, there's the possibility to earn more than 5 marks if capped at 5, is basically what I'm saying. And then 5.6, any 2 types of cash dividend, and that's just your constant payout, stable dividend, or stable dividend bonus. Your question 6 is a cash conversion cycle question. So you were given information for 2 years, 2016 and 2017 for a company. And then question 6.1 said, calculate the cash conversion cycle for the year ending 2017. Please do it for the correct year that they've asked in the required, and do not do it for both years. Okay, if they've only asked for 2017, don't waste your time doing it for both years. You won't get extra marks. And so 14 marks, do it for only 2017. And again, make sure you'll have to memorize these formulas, how to calculate inventory days, accounts receivable days, and accounts payable days with the information given. And remember, they have asked the cash conversion cycle, which is inventory days plus receivable minus accounts payable. That's our cash conversion cycle. And there were 2 marks given for method marks, which means that you must add ID plus ARD and subtract AP in order to get those marks. And for 6.2 for 10 marks, this is your investment in the cash conversion cycle, and the required says calculate the increase or decrease in the rand investment required to support the cash conversion cycle from 2016 to 2017, with a cost of capital of 12.5%. So here, with the 2 years worth of information, you had to calculate what rand amount is invested. Okay, so just remember, you've got to use this number of days of the cash conversion cycle that you calculated here, the 9 days. You have to use that in order to calculate the amount that you have got invested. This one over here, I think they must have told us. Let me just look at the info. Yeah, at 15 days for 2016, that information was given. But you had to use the 9 days calculated for 2017 here. Your cash conversion cycle has decreased from 15 days in 2016 to 9 days in 2017. So you need to calculate the rand value invested using 2016's information, total working capital invested there, and 2017's there. And then the decrease in the rand amount, so the 2 totals subtracted from each other, there's your amount, multiplied by the 12.5% cost. So there's a decrease in the cost of 19,546. You can see how nicely this is laid out. Everything has been headed correctly. It's been described correctly. So you can see exactly what that amount represents. And then when I have done my calculation under here, I've headed it to show that here I am calculating what the amount of the decrease is, and here what the amount of the decrease in cost is. And then for 6 marks, this one is theory question. Any 6 symptoms that may indicate that a business is overtrading. So 6 different symptoms of overtrading. So that's theory going right back from 2nd year you started study in overtrading. And then our question 7 for 15 marks is capital structure. So we have got a company. Just show you this one. Is the last question in the paper. Oops, I don't want that. I want that. Okay, so here's question 7 for 15 marks. Our company has a capital structure that consists of 75% debt and 25% equity. 28% tax rate. Interest on debt is 16% before tax. New project being considered, and it's going to cost 80 million rand. They are deciding whether to raise it through an issue of new shares. If they do issue shares, then the total equity will be equal to 230 million after they have raised the shares. Do you know how many students last year could not work out that? In order to work out what the equity was prior to that, that all they had to do was deduct 80 million from the 230 million. Then assume the cost of equity is 18.25% and will remain constant. So calculate the amount of debt and equity under the current capital structure for 5 marks. Calculate the weighted average cost of capital if the new project is financed solely through the issue of new shares for 6 marks. And then financial risk remains unchanged for 4 marks. Explain what is meant by this assumption. Here is memo. So the first one, calculate the amount of debt and equity under the current capital structure. So you calculate what is my equity currently. 230 million minus the 80 million. It's current. It was 150 million prior to purchasing at 80 million. Now that I know what the total equity was, and they told me that equity was 25%, I can then extrapolate that to calculate the rand value of the debt, which is 75%. So in other words, 150 million equals 25%. Oh, sorry, I've got a pain here. Then 75% is 450 million. However you've done your calculations, again, write it out neatly, explain what you're doing. And I also would have maybe in my workings here labeled what's debt and what's equity, because there's the equity. Yeah, they have done that. That's equity, and this is the debt. Okay. So you first had to calculate what the total structure, if that's 25 million, my total structure is 600 million. And there's various ways you could have done it. They subtracted the 150 from that to get 450, but you could also have said if that's 25%, then I can easily work out what 75% is. And then 7.2 was your WACC. And remember with these questions that I've told you since we started working it, that it's critical that you absolutely know what this model looks like. You must lay it out like this, and then you will not lose any marks, and you'll find your workings easier to do as well. And the first column, you're going to list all the different elements that make up your capital structure. In this case, we've only got debt and equity. Then your first column must be the market value or the book value, whatever they've asked you to use to calculate the WACC, the total value, and you must have a total column here because you need that total in order to work out the weighting of the 450 of the 680 and the 230 of the 680. Okay. Then after that, you write down the cost of debt and the cost of equity after tax. So here we've had to convert our 11 point, what was it, our 16% before tax cost of debt. We're only taking 72% of that because the other 28% is saved as a tax shield. And then your last column, we need a total column for the WACC, which is then my weighting multiplied by my after-tax cost was 7.6. My weighting multiplied by the after-tax cost was that. Okay. And then you add those two together to get your total WACC. Some students leave the total amount out. WACC is the total of the weighted averages. Okay. You're sure to get some kind of WACC question some way or other. So that's 6 marks for laying it out. And you can look at how many method marks there are. Just about everything here is a method mark. Okay, the weighting is not, because you have to calculate the weighting correctly from whatever you've put down here. But that's a method. That's a method. That's not. Your cost, they gave you that 16%. So they're not giving you a method mark there. And that they also gave you that 18.25, so no method mark. But all 3 of these marks here at the end are method marks as well. So what I'm saying to you here is that if you know what your layout looks like, you are going to get all the method marks awarded in a WACC calculation, of which usually many. And then the 7.3 was the 4 marks for the explain what is meant by the underlying cost of capital is that financial risk remains unchanged, one of our key assumptions. So that's obviously comes straight out of your textbooks, Learning Unit 1, cost of capital chapter. Okay, so that is right up to date. It's a 2018 paper. So again, hopefully this has been, I think going through these papers is just a very good revision of all of the work, as well as, I mean, it's not so much about looking to see what's going to be in the paper, but it just refreshes everything in your memory that we've done the whole semester. Okay, any concerns, any worries, any questions about that? That seems quite a nice semester of work, I think, to be examined on. Yeah, there is a lot to be remembered, and you'll honestly, guys, as I say, the only way to get really good marks, especially with the closed book exam, is practice. And that means practicing at home with a closed book. Practice testing yourself. Did I read the required properly? Have I laid it out correctly? Is there a heading for my workings? I can't emphasize how important that is. All right. Thanks, Liam. Thanks, Demi. Okay, darling. So tomorrow I will see you in the morning for tax. And what did I say? We've only got 2 tax classes left. We've got that to do tomorrow, am I right? We'll the chapter to finish tomorrow, and then on the 29th we'll have a look. I might actually even just finish off tomorrow and then not have a class on the 29th. Maybe we'll just have a look at a paper tomorrow. Because of that, honestly, guys, we don't need to have a whole class on VAT. You've been doing that since first year accounting, and you can definitely self-study that VAT chapter. You just have to remember all the VAT rules that you learned in first year in accounting. What is exempt, what's 0 rated, and what's standard rated. That's really the most important part. And then what's input VAT, what's output VAT, calculate a net VAT. And there might be a bit of theory. Okay. So maybe tomorrow morning will be our last tax class as well. Okay, guys, so I'll